Hello traders, welcome to the video. I'll be showing you a strategy that you can use to trade the gold market. So gold market is one of the interesting markets that people trade in the forex market, and two, gold is one of the most volatile pairs in the forex market, and it's also a way that you can easily grow your $5 to a lot of money if you get a perfect entry. I'll be showing you how you can combine indicators with price action and make money out of the gold market. So if you look carefully on my chart, this is the 30 minutes time frame and this is XU. Here we are not using the 1 minute time frame. We are not scalping. Like I said in my previous video, that swing trading is one of the best way you can make money in the gold market. So here we don't need any higher time frame to determine our direction. The black moving average over here is which helps us determine our direction. If you want to determine your direction, you can go to your daily time frame or 4-hour time frame. Then you trade in the direction of the higher time frame. So this will help you to get a more accurate entry. So if you look carefully on my chart, I have just 3 indicators. Over here, I have moving averages. I have the RSI, which helps me to know when the market is overbought. The level above the 80 is overbought, while the level below the 20 is oversold. So what we know is that when this envelope over here enters into the 20 level, we know that the candles is likely to buy to the upside. You see over here, if you mark, you see the market goes to the upside after it enters into this level. And whenever it enters this level, you see our market falls to the downside. This line inside my chart is the envelope indicator, which helps me to know exactly when the market is overbought and oversold. So we will be combining the price action also with our entry, which will give us a more perfect entry along with the moving average. We will be using the support and resistance. So this is like a breakout strategy. So let me explain that to you. Let's say market is in a consolidation and you draw a resistance and support level. This is the resistance and this is support level where markets have tested at least 2 times. So you can see over here, so we expect market to break out, the test, and continues in a downtrend. We can also expect it to break to the upside, retest, and go to the uptrend. So this is when we are buying and this is when we are selling the market. Hope you understand what I am saying. So for the zoom level, let's say this is the zoom in. So you zoom in completely. You see over here, this is the last zoom level. So this is the level that we use for our trading. So over here, we want to focus first on the black indicator. Is the black indicator below the candles or it is above the candles? Whenever the moving average is below the candle, market is in an uptrend. So if you look carefully, we see how gold has been trending to the upside. And whenever the candles is below the moving average, let's say it's the moving average and the candles is below it, so market will go in a downtrend. So if you look back, you can see over here, this is a downtrend condition. So after we confirm that, we know that market is in an uptrend. So we are waiting for when the envelope enters into the 10 level. Then we come to our chart. We zoom in, look for area where markets have used as a support and resistance. You can see over here. Let me take my tool. Here, support, resistance, support, support. So we wait for when market will break it to the upside. We have a breakout, retest the moving average. You see how it wicks the moving average. Immediately you have the wick of the moving average, then you enter your buy and then you hold your trade. So once you see the candle crosses the black moving average, it confirms to you that market is likely to continue in an uptrend. So you see how market goes. So you close your trade when it crosses the blue moving average. So you can see over here, we have the cross at this point. So you close your trade. So before that, you see how it was rejecting the moving average and then it closes here. You can also close your trade when it enters into the 80 level. You can see how it works out at this point. So here you have another trade. You see how the envelope enters into the 10 level. This is also showing you that market is still in an uptrend from the black moving average. If you look over here, so this is just a consolidation to know if market will go down or it will spike to the upside. Then you zoom in, then you look for area where markets have used as a support and resistance. You see how market is as a resistance, 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 support, support, support. So like I said, you want to look for the breakout that will reject the blue moving average. So if you look over here, we have a breakout. Already markets have gone above the black moving average, which is confirming to us that market is likely to go in an uptrend. But we are looking for the rejection of the blue moving average. Come back over here, closes below, then reject at this point, pump to the upside. So once we have the close, we enter our buy and then we hold our trade. So we have a close here, we can close our trade. But one thing you should know is that the black moving average, which is telling us that market is still likely to go in an uptrend. So you see a pump to the upside above the moving average again. You can enter a buy again. Then when it closes, you close your trade again, and immediately it goes up again. You enter a buy, reject the blue moving average, reject again, and then closes above at this level. Reject to the downside. So this is confirming to you that market is now on a downtrend and then fall to the downside. Hope you understand what I am saying. So let me show you example for the sell condition. So you can see over here how the envelope enters into the 80 and 90 level. So we zoom into this level. So if you look carefully, so we can see over here, we see how market use this area as a support, this one as a resistance, break, this is a fake out, come inside again, then reject the blue moving average. You can have your entry here, but your stop loss will be above this high. You see how it enters into the range again, breakout, and retest the moving average, which is confirming to you that market is likely to go in a downtrend. Then you have the cross of the black moving average, which is confirming to you that now market will go in a downtrend. You have the close of the blue, then you close your trade, the one you enter from this point to this level. Then after that, you wait again for when it breaks below the blue moving average, because this is confirming to you that market is still going in a downtrend. So you have the rejection over here. If you look carefully, you enter a sell and you close your trade when it enters the blue moving average. But you see that the candle that enters this point is too much, so market is likely to continue in an uptrend. So now let me show you settings to my indicator. First thing you do is to click on this indicator icon over here. As said, I have just three indicators: moving averages, relative strength index, and the envelopes. To select the first moving average, click on the F icon on the main chart. Moving average. Make your period to be 25, shift to be 0, method to be simple, apply to close, style 3 pixel, select color of your choice. After that, click on save. This is our entry moving average. The second moving average, click on the F icon on the main chart. Moving average. Make your period to be 200, shift to be 0, method to be exponential, apply to close, style 3 pixel, select color of your choice. This is our directional moving average. After that, click on save. For the RSI, relative strength index, click on the F icon on the main chart. Scroll down, RSI, click on that. Make your period to be 1, apply to close, style 1 pixel, select color of your background. If your background is white, select white. If it is black, select black. The levels, click on this pen icon. Click on this add to add level. Type 90, 80, 50, 20, and 10. At the front of 80, type sell. At the front of 20, type buy. Style, make it 1 pixel. Select color of your choice. After that, click on save. The last indicator is envelopes. To select that, click on the F icon on indicators Windows 1. Envelopes. Click on that. Make your period to be 14, shift to be 0, deviation to 0.008, method exponential, apply to close. For the style, make it 2 pixels, select color of your choice. After that, click on save. If you follow my settings correctly, your chart should look exactly as what you see over here. So after this, I want you to go back on your chart, backtest this strategy, spend more time with your chart. The longer you spend with your chart, the more you understand the market. After that, go on your demo account, trade it in a live moving market. Try and test it for at least 2 to 3 weeks and see how profitable you will be. So if you like your win rate and then you see that you are profitable, you can decide to do whatever you want with the strategy. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, and turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.